Good evening, Mayor, Deputy Mayor, and Councilors. For the record, I am Connie Anderson, Deputy Director of Administrative Services. I am here this evening to provide an overview of property taxes in Washington State. Just a little history. Property taxes in America originated during colonial times. Property tax laws have been around for hundreds of years, adopted differently by each state. It is the most widespread form of taxation at the state and local level in the United States. As with many taxes, property tax law is complex. Washington State uses the budget-based property tax formula to calculate individual property tax amounts. It consists of the following three components. First is the levy amount. This is the amount requested by each taxing jurisdiction. Second is the assessed value. This is the determined value for purpose of taxation. Washington State uses fair market value. On the other hand, some states use the purchase value, which does not support equity and uniformity, part of Washington's Constitution. Third is the levy rate. This is the tax rate applied to the assessed value to determine the individual property tax amount. A note of interest, from 2018 to 2021, the state levy was changed from a budget-based system to a rate-based system to incorporate the education changes from the McCleary Act. Beginning with taxes in 2022, the state will return to a budget-based system. In Washington, lots of rules have been applied to safeguard the property owner. The state set a state max rate of $10 per 1,000 in assessed value. The $10 is broken down into three components. The state gets the first share at $3.60. Local districts such as counties, cities, and road districts share the second component of $5.90. The city is part of the local component. And the final 50 cents is shared by other special purposes such as criminal justice, affordable housing, metropolitan park districts, and the ferry service. Within the $5.90 local component, cities have a max rate. Cities with a library district and a fire district are allowed a combined maximum rate of $3.60. Here is what the distribution looked like in SQUIM for 2021. This graph shows the complete picture of the levy rate for SQUIM residents and how the property tax is shared with all the taxing districts. For city, the schools, state, fire services, library, hospital, county, and port. Each taxing jurisdiction determines their individual levy amount, and the county certifies the amount for each. Notice the total at the bottom of the chart. The levy rate is below $10, and the estimated tax bill for a home with an assessed value of $250,000 is $2,346. A certified levy is the requested tax amount made by each jurisdiction. Each year, a jurisdiction can only increase their levy request by 1% over the prior year, plus additions from new construction and annexations. This revenue growth limitation was put in place by an initiative back in 2001. The 2001 initiative implemented revenue growth limitations for most governments to the 1% per year plus new construction. Even though the state Supreme Court found the initiative to be unconstitutional in 2007, the state legislature put it back into effect. The revenue growth limitation does not keep up with inflation or population growth. In 2021, the CPI has hovered over 5%. Based on the state constitution, property taxes are uniformly applied. This is done using a fair market value approach to the assessed value. The assessor's office reviews sections of the county from east to west every 6 years and applies their findings countywide to maintain equity and uniformity. Here is a picture of SQUIM's assessed value over the years starting in 2004. In 2011, $907 million was assessed value, and again in 2017, $906 million was the assessed value. This was 6 years later after a dip in assessed values during the Great Recession. We officially crossed over the 1 billion mark in 2019, and we continue to grow. SQUIM assessed value increased approximately $65 million this past year. $17.5 million, or about 27% of the increase, is related to new construction. Take a look at the levy rate line. This is the black line towards the top of the chart. As assessed values increase, the levy rate goes down. When assessed values declined, the levy rate went up. So now, as assessed values improve, the city's levy rate goes down. Increase in assessed value means our 1% is spread further, thus decreasing the actual levy rate per 1,000. So even though SQUIM's total levy request or dollar amount is higher, the levy rate, the rate per 1,000, goes down. This increase in assessed value has eased the compression on the statutory levy rate limit, the $10 state max rate. Assessed value for new construction is added based on the fair market value of the property and is added to the tax rolls when construction is completed. The county appraiser reviews all new construction. New construction is calculated at the full assessed value the first year to pay for their fair share of city services. New construction added to the rolls is from approximately August 1st through July 31st of the following year. This year, new construction is estimated at $17.5 million. Here's a listing of levy rates for our current comparable cities. As you can see, we are on par with a couple of them, Port Townsend and Poulsbo, but several are above us, Chehalis, Port Angeles, and Prosser, as well as Woodland. And one is below our levy rate, which is Snohomish. If you really just need a good laugh, I encourage you to check out this YouTube link and see how Mom and Pa do basic math. They have their own way of adding, multiplying, and dividing. Property tax math can also be just as bewildering to understand and can make you scratch your head. A jurisdiction must calculate the allowable levy amount 3 different ways. The taxing district is limited to the lowest amount. First is the highest lawful levy request, which you can see in the lower left. Second is the statutory max amount in the lower right. But the actual levy calculation at the top and marked with a star, this is the lowest amount and the calculation we actually are allowed to use to determine our allowed levy amount. Again, it's the lowest amount. The basic mill levy concept is to take the amount the city requests, or the levy amount, divide by the total city assessed value, and then multiply by 1,000. This creates a basic levy rate that is then applied to all property owners. So applying this concept, calculating the levy rate for SQUIM is just applying the math. In the end, this is the basic formula that counts. So what happens if the 1% levy increase is banked and reserved for a later year? Banked capacity has long-term impact. Each year, the city loses out on the amount that was banked. The city banked the 1% levy increase in 2011 and 2012. Because of the banked levy, every year the city loses out on over $25,000 it could use to provide city services. The annual $25,000 to $30,000 can be used to support many things in our general budget. Here are a few examples. The arts program, which supports the local arts community and promotes the economy of our downtown core. The general fund contributes $34,000 to this program. Keeping our streets safe in the winter. On average, we spend about $25,000 in sanding and de-icing materials. A major event like Snowmageddon a few years ago actually cost us over $185,000 in labor, equipment, and supplies. If the council decides to bank the 2022 1% levy increase of $16,744, the banked levy amount will increase to $45,000 annually. This brings us to a level that actually covers the cost of half of a police officer or half of a street crew worker. As far as banking capacity, it really is a magic disappearing act. Current assessed values with the addition of new construction creates a smaller gap between the highest lawful levy and the actual levy, and bank capacity really does disappear. The City of Sequim's current bank capacity is $9,680. Property tax is part of the healthy mix of revenue resources that supports general government services. This healthy mix has kept the city sustainable and our continued ability to support local services such as city infrastructure, including parks, streets, sidewalks, and facilities, community planning and development services, public safety, community policing, and emergency management, internal city services such as services from the clerk's office, your finance department, or your city manager's office. Not to mention, it's what we use to keep the lights on. Even with tax changes, exemptions and assistance is still available. There are several options available and are all administered through the county assessor office. Staff will be recommending the 1% allowable levy rate increase. The 1% does not keep pace with CPI, which has averaged above 5% most of the year. This helps to ensure we have the resources to meet council goals and community needs. Thank you.